Hello, in this presentation we will work multiple choice questions, going through multiple choice questions related to key accounting terms and accounting equation related information. These will be a format that will be similar to many test questions for this type of subject. Starting with first question, primary financial accounting objectives are A. Provide financial information for internal users. B. Provide financial information for external users. C. Control company activities. D. Provide cost-benefit analysis. And E. Explain whether a business is profitable. Note that this is the type of question when we're thinking about the primary financial accounting objectives, where we may consider there being more than one correct answer. We're basically looking for the most correct answer in that case. In this case, we're going to say that the most correct answer will be for external users. It's going to come up a lot. This is a common question. Who are the financial statements for? Primarily, they're for external users, those outside the company, those being the creditors, those being the investors, those being people like the IRS. We're geared towards those external users mainly because those are the people that are more dependent on the financial statements. So all the regulations that we put together usually are in keeping them in mind, those external users, those being the needs, the people that have a greater need for those type of regulations. So all financial information for external users. Next question. Accounting concept that assumes a business will remain in business, has a long-term business objective, and will not be going out of business soon. A. Business entity. B. Going concern assumption. C. Cost concept. D. Objectivity. E. Reliability. These are going to be some types of assumptions that we just need to basically know when we look at the financial statements. One of those is that we're assuming when we consider the financial statements that the business will remain in business and has a long-term objective to be in business. We consider that the going concern assumption, which in this case is B, the going concern assumption. Here, correct answer for the going concern assumption being that assumption that assumes that the business will remain in business. Very important assumption. If the business is not going to remain in business, they need to disclose that, because when we look at the financial statements, we're going to have a much different assessment about the company as to whether they believe they're going to be leaving soon. We assume their behavior will be much different if they're going to be in business for a year and then be out of business, as opposed to if they have that long-term goal. Our default assumption is that they have a long-term goal to be a going concern assumption, to be remaining in business for a long period of time. Next one. The private sector group having control setting generally accepted accounting principles is A. The AAA. B. FASB. C. The SEC. B. FASB is FASB. C. SEC. The SEC. Letter D is the AICPA. And E is the MBA. So note that we're talking here about the FASB or the FASB. When considering this hierarchy, note that we start to think that these financial statements are basically just a regulatory thing and they have no really intrinsic purpose within the business world sometimes. Note that that's not necessary. That's not the case. Obviously, if we had no regulatory requirements, we would still use double entry accounting system. It was generated on the private side, not by a regulatory body, but we had a need, of course, and we have a need to standardize that information so that external users can kind of compare the data. And note that we're following the exact same rules, because that really helps for the trust within the business, and therefore we need to regulate. But what we've done in essence is taken those best practices and put them into a standard form so that people can rely on them. That's typically done by the major rules we always go back to are going to be the generally accepted accounting principles, GAAP. And then the question is, well, who makes GAAP? You can think of the FASB, the FASB, Financial Accounting Standards Board, the answer B, being the people who basically are in charge of creating the generally accepted accounting principles. A partnership, A, has unlimited liability for partners. B, is owned by one person. C, is owned by stockholders. D, is a separate legal entity. And E, is owned by the government. Answer there, A, has unlimited liabilities for partners. This partnership is going to be kind of similar to the sole proprietor. Note that the sole proprietor is very easy to form in that all you do is you can basically just start doing business and you're a sole proprietor as long as you start acting like a business and start generating revenue. Partnership is pretty much the same way. If 2 or more individuals start just generating revenue, they are in essence a partnership and have certain reliabilities, including paying taxes. A partnership, too, is not a separate legal entity. So it's not a separate legal entity, meaning, and for liability purposes, that generally means that they're more susceptible to litigation. So that's one. So if they, for example, if someone sued the partnership, then they might be possible or more possible, it's more easy for those individuals to go after personal assets rather than just the business assets. That's one of the major reasons for incorporating that liability protection. So the answer here, a partnership A has unlimited liability. B is owned by one person. Obviously that's not correct because a partnership means 2 or more people. That's the definition of a partnership. C says a part is owned by stockholders. That of course would be a corporation and not a partnership. D says a separate legal entity, not a separate legal entity. Notice that we have a separate entity concept in terms of accounting. Keep that separate in your mind. We will have a concept of a business assumption, meaning we're going to keep the partnership books separate from the individual's books, but that's not the same thing as a separate legal entity. Separate legal entity, you can kind of think of it as like the partnership, like a piece of paper, just not even an abstract thing, not even a person, basically having rights that we typically give to people, such as owning assets, owning property, and that's not a partnership. E is owned by the government. That's not true. And next one, if there are ethical concerns related to a business decision-making process, decision-making process should A, be agreed upon by everyone involved. B, avoid increasing doubt on the decision maker and decision process. C, reduce transparency of the decision making process. D, avoid explaining the reasoning for the decision. Or E, avoid explaining the decision making process. So once again, if there are ethical concerns related to a business decision taking should, and we're going to say the answer B, avoid increasing doubt on the decision maker and decision process. So clearly what we're trying to do, if there's going to be ethical concerns, we want to basically, reassure the process, make sure that the process is going well. We want to avoid increasing the doubt on the decision maker and the decision process. So next one, use the accounting equation to find the asset amount if equity is $250,000 and liabilities are $100,000. In this type of problem, I would always write down the accounting equation. We can abbreviate it as assets equaling liabilities plus equity. I know that's not the most nice looking of things, but I would always write it down and then put the algebra in there so that we can then solve for the algebra. And even though there's only 3 numbers and we could probably do it in our head and just add and subtract it, if you write it down, you're much more likely not to add or subtract going the wrong way. And note that if you do go the wrong way, that the answer that is incorrect will almost surely be there. So any combination of the numbers presented will probably be one of the answers, giving you that false sense of security. So obviously here we would just plug in the equity of 250. I'm going to drop the zeros, 3 zeros, and the liabilities of the 100. Again, I'm going to drop the zeros and equals the assets, and then we can go ahead and do the math and we would get the 350. So you just want to make sure you're not going the wrong way, of course, and getting the 150. They're going to give you all the types of combinations there. They're going to try to provide that false sense of security when you do the math a bit wrong. So just make sure to write down the equation every time as much as possible.